Good morning and welcome to the market forecast. It is Tuesday, August the 3rd. I'm John Hoagland. Thanks for trusting me with your time. We have some interesting things as we do just about every day in these markets, always changing, always challenging us, and always reminding us that we need accurate context, good risk management, and deep amounts of patience. Looking at the title of today's forecast, the markets seem like they're in an unusual situation, and I'm mainly focusing in regard to the equities. All the equities, as a matter of fact, 6 out of the 7 markets that we look at in the morning here on the forecast are in inside extended trading hour ranges. Crude oil just changed that. We've got a pretty decent move here going in the crude oil busting out of weekly kickoff low and looking like it's finding some direction to the downside. We're going to check that out shortly. As always, we're going to start with the economic numbers this morning. 7:55 Central. The Red Book came out, not impactful. 9 o'clock a.m. Central Time. Factory orders are due out. May or may not be somewhat impactful. As far as the news is concerned, we've got the return of the mask. Apparently, there are that's the hot topic in the news for the last 24 hours. As more and more local governments reintroduce mask mandates as COVID cases continue to rise. It may be a little bit preemptive in that, from the numbers that we're seeing, and who knows how this whole thing is gonna play out. All I know is I keep praying for a quick end of COVID. Huge list of earnings today already out. Much of the uh, petroleum companies, we have BP and ConocoPhillips already out with mixed earnings. A lot of mixed earnings this morning. Alibaba with mixed earnings. Again, BP and ConocoPhillips with mixed earnings. Marriott, a little bit mixed earnings. DuPont beat on both earnings and revenues. Amgen due out after the close. Lyft, Hyatt, between Marriott and Hyatt, a little bit of information on how the hospitality industry is doing. Hyatt out after the close, as well as Caesars. Crude prices put a kind of a dead cat bounce together last night. Obviously, that dead cat bounce has become more directional to the downside. Um, there was a pretty good route yesterday from weekly kickoff high basically to weekly kickoff low, now breaking out down below it. Eyes on the petroleum companies and earnings and revenues today. We also have API later on today, as well as the EIA Petroleum Status Report due out tomorrow at 9:30 Central. As usual, make sure you smash that lucky like button. Share, comment, question, feedback, and heckling are always welcome. And make sure you subscribe to our YouTube channel when we do go live. We do have the group coaching that is tomorrow at 1 p.m. Central. I've just put the link in so you can sign up, and I look forward to seeing all of you there and answering as many questions as I can. Got a couple of emailed in questions already. It looks like it's going to be an interesting session, so please feel free to join me there. As far as the VIX is concerned, down a little bit from the close yesterday. Of course, it was a bit of a boost in VIX yesterday with the move to the downside. 1912 currently. The dollar index still down below $92 at 91.98, holding pretty much steady. In the 10-year yield back up at 1.175%. A little bit of a boost from yesterday's open. And as always, I got to say good morning to my friends here. Ravenwise, first in the room, you win the prize. Brian, George, Ednelson, good morning. George, good morning to the best trader community around the world, and you guys all make it that way. Polymath, good morning. Jim Wolf, Harry Gordon, and a good morning to you as well. Caesar, Deanna Floyd, Tanya, good to see you this morning, Tanya. Rob T, Jason Cargill, Ryan Williams, Vince Capria, good morning. Laura McLaren, I always feel like I should know you, Laura. Greg H, the Chef Magallanes in the room. Frederico, good morning. Greg H, wonder what triggered that very fast $2 drop in CL. Well, we're going to take a look at it. I don't know if we're going to be able to ferret out why it happened, but the fact that it did happen is maybe information we can use for our session today. Trading research, good day to you. Toadman Extra, good morning. April Gonzalez, good morning. Jim Wolf. It's the Coach's Corner today. Yes, it is today, approximately 11:30, and we are going to be talking about responsibility, keeping your responsibilities in your trading. Frank, good morning. Today is my first day in a funded micro swing account. Any tips? Just take your time. Take your time. I find that it can be helpful for traders moving into a funded account to just sit and look at the dome. It's a live market. It's a little bit different. It's going to act a little bit different. Fills are going to be a little bit harder to come by. Just get your head wrapped around the fact where you are and get back to your process. Chris, good morning. Nelson Benitez, good morning. Trading research, there is no novel virus, nothing new. In other words, there's no COVID. Remember the 1839 radio broadcast, War of the Worlds? The Rockefeller Foundation sponsored it as a psychological, it is about almost 100 years ago, right? They are behind the AMA and the ACS, and both are agents of deception, control, and death. Some interesting opportunities, some interesting opinions there, Trading Research. Thanks for sharing that with us. Alex, good morning. Colton, Trading Research. Read Murder by Injection by Eustace Mullins. Psychological Experiment. And it's kind of conspiracy theory kind of stuff going on there, but the way things have gone and the way our politicians are, there's nothing that surprises me anymore. Richie B, good morning. And let's think about taking a look at these charts. As again, most of our markets opening inside yesterday's extended trading hour range. I find that to be interesting. Excuse me, my goodness. As a matter of fact, in our equities this morning, I almost have them on the back burner, and that's not a very common. Yeah. Hey, you said heckle. Absolutely. Appreciate that, Trading Research. Ange, good morning. Moguitar, good morning. So again, a lot of these markets kind of opening inside ranges, inside extended trading hour ranges. It's going to be an interesting trading day. Let's take a look at what's going on. Daniel, good morning. At what's going on in the markets this morning. I got a little tickle here. Let me take a sip of coffee. I got a very happy coffee mug here. Get a little Norwegian gas there to get the things going here. Okay, on to the charts. Daily and crude. This stab to the downside here is a new development here since about 5 minutes before the open. I noticed it started to kind of get itself taken apart. There are a couple of naked points of control down below. We're going to see that on the 30-minute chart. We lost 3,000 in open interest yesterday, so it wasn't like there was a bunch of money coming into the short side. It was more like a little bit of long liquidation, perhaps, from recent activity. I was thinking it was probably going to be a smaller market today because of the energy we expended to the downside and the dead cat bounce. Setting up these notes, it was still an inside extended trading hour range. So it was looking at the weekly kickoff low and last week's low as kind of a high target area. And when I say a high target area, I'm talking about an area that bodes thought of execution, not necessarily direction, but bodes thought of execution. Now let's take a look at how this move has and how it has happened. So this morning, sitting down 6:30, 7 o'clock, the market was really just kind of range bound. No overnight inventory. No reason to really feel like I needed to rush into anything before the open. But just before, just before 7:30, the market started to kind of look to the downside. Now we've got some one-time framing activity. In other words, One, two, three, four 30-minute bars have had a lower high and a lower low. I don't want to fight this move to the downside. If we're looking for a visual target, we've got lots of space down below, all the way down to $67 before we hit a naked point of control. That naked point of control comes in back here from the 20th of July. No, never retouched, never rechecked. We even had one here, but this one was rechecked the following day. So, there is space for this to continue to the downside. I do not want, again, to try and fight this without some sort of structure with which to lean on. These whole moving averages are indicating that there is still momentum to the downside. This is the 9 session. This is the 13 session whole moving average. Price is below them. It's one time framing lower. I do not want to fight this move to the downside, as many people are very tempted to do. It's making new lows, making new lows. We start to think, well, it can't go any lower. And as we learned in the last year's May expiration, when they say it can't go to zero, don't believe them. I'm not suggesting that's going to happen in many ways, shape, or form today, but I don't want to put myself in a situation where I'm buying a new low and getting run over, buying a new low and getting run over, buying a new low and getting run over. So try and stay patient. If you're looking for opportunities to look to get into shorts here, make sure it's on a pullback, not on the new low. That just creates opportunities for you to have to sweat out a pullback and then to have the market turn and perhaps finally even make you money. So what I'm going to be looking for this morning is, I want to show you this, and it's going to be very short time frame. So here's the session for today. Okay, this is regular trading hour session. It appears as though the opening range has been left at the high of the regular trading hour session. A move back to the opening range could offer us an opportunity to look for a short. There was very little volume up here. When we start to look for places to look for shorts, I'm going to go from a high volume to a low volume. I call these volume shoulders. When we're looking for an opportunity to get into a directional move, I try and look for the slope back to the low volume node that's just above, in order to be able to limit the risk. There's a lot of risk on this move. There's also a lot of potential opportunity. So when we go from high volume node to low volume node on a down move, this volume shoulder offers me that opportunity. If we get too deep into or through the low volume node, that's enough to probably tell me that I need to look for a new level. So we've got a low volume node here and a high volume node here. If we get back down here and we can't get back through this low volume node, that's going to indicate potential move to the downside. We've just had a look back to probably the opening range and this volume shoulder for a potential entry to the downside. And again, we're looking for the market to maintain below the low volume node that occurred right on the open. It's a lot to swallow right there, and we'll be talking more about that over days and when we have opportunities with which to see that type of situation. Equities. We have 7 days in balance. We have no real we have no real decision making in these bars. We have lots of long shadows. We have lots of narrow, small little candle bodies. The open interest increased yesterday by 16,000 contracts, so there may be an indication that the market may be beginning to build some energy to move away from this, but with waiting for information, the infrastructure stimulus, the other infrastructure stimulus, the employment situation and numbers due out as the week goes on, the market seems to be really just hungry, waiting for new information. Take a look at the 30-minute chart. Okay, we have an inside day from yesterday's range and extended trading hour range. Settlement is all the way down at the bottom here, 43.79.75. We got a little bit long back into value, back into, hey, here's one of those low volume nodes we were talking about if we're looking for opportunities on the volume shoulder down to that volume node. That could be a decent, a decent potential area. It's showing rejection from yesterday. It may show rejection again today. But again, I'm just going to be trying to remain pretty patient this morning because the market is really just kind of hanging in the kind of a dead cat bounce from the move to the downside yesterday. We may have some overnight longs here, which could bring price back to our overnight low or settlement. I don't really see any high target areas in this market. As a matter of fact, I've almost got it written down here that so far, without some sort of change, this market is somewhat off my radar, which is very unusual to say about the S&Ps. Just not seeing really good opportunities here until, again, something changes. Back to the daily chart, we are just like the tennis player holding at center court, looking for our new volley, which could bring us lower, could bring us higher. We don't know. Therefore, I'm kind of on the fence with the equities this morning, without some sort of new information or some sort of new direction. I think it's going to be a bit of a random walk. Look at the Nasdaq, same situation. Our tennis player is center court looking for the next volley. Could it be higher? Could it be lower? Open interest yesterday was absolutely moot. We lost about 500 contracts in the Nasdaq, and zero the day before that. There's no interest coming into this market. Again, information starved is the way I'm looking at these markets. Information, infrastructure, employment. Again, inside extended trading hour range. Taking a look back at the 30 here. In range, in value. Is there an overnight inventory? If there is, it might be a little bit to the long side, but not really necessarily viewing that as a tremendous opportunity. I don't see any reason to really try and rush into anything. I mean, we're right at the high volume node or the point of control from yesterday or relatively close to it. Is this off the radar? It's almost unnatural for me to say that. But for me right now, the way this is in the equities, without some sort of change, I'm kind of looking for something else to do. Is it going to be in gold today? We see that we've got opportunity in the crude oil this morning. And again, here we are. Our tennis player is center court looking for the next volley. Will it be higher? Will it be lower? Inside extended trading hour range. Central in last week's range. Central in weekly kickoff levels. And it's not as though they're very tight either, or very far apart either. I mean, these levels are relatively tight, speaking for gold. I mean, we see that the market, is perfectly capable of spanning this entire range in one day. But it's been inside of it for 2-3 weeks now. Is this off the radar? Well, in the position it's in, it seems a smart thing to do. Here's settlement all the way up here, 1822.20. Okay, we had a decent move to the upside. We lost 4,000 in open interest yesterday. And again, where did we go? We were right in the middle of our area of balance, our area of range. So it's very difficult to really try and find any directional activity, even though there is. Our opening range yesterday got taken out before we became directional in the daytime frame. The day before, we had a directional activity in the day time frame. The market is moving in one direction at some point here. Excuse me 1 second. And we should be okay. We got the mic back. Sorry about that, folks. So again, We're centrally located in the range from yesterday. We're centrally located in the longer time frame range. Where are our points of interest? Where are the fish? Well, the fish seem to be spread out all over the place. It's going to make them a little bit more difficult to find. So gold, not necessarily in the current situation, a target-rich environment. What about the euro? Okay, the euro, well, centrally located between weekly kickoff high and weekly kickoff low. It's getting kind of old to even say that. The market's in a range for the last 3 sessions. Inside extended trading hour range again last night and today. We added 1,200 in open interest yesterday. Not a tremendous amount, but it does seem to be saying that maybe some energy might be coming into this market. We didn't add anything the day before. 30-minute. We got a little bit long in the overnight. That has now been reconciled. We see settlement is right down here at 118.82.5 ticks. We have overnight longs reconciling back towards settlement, back to the center of the value area range here. Again, looking for areas where we might find a lot of fish. They seem to be spread out a little outside of where we are right now. So, Charles Lucas is saying, it looks like it reminds us that it's still summer. Markets look asleep. I think I might sit today out, but with the infrastructure bill working its way through Congress, I still feel like there is potential for some sort of headline risk that could change this situation in their equities, in gold, in the euro, and even in the treasuries, with the stroke of a tweet. Kind of reminds us of the past here, but if there's something that changes in that regard, I think that's what these markets are looking for. They're going to be on a hair trigger about that. So there may be opportunity. Hopefully, we're not going to be the wrong way when something like that happens. Make sure you're using stops. But the market just seems to be waiting for new information. Euro, somewhat off the radar today, inside extended trading hour ranges, inside value, coming back to settlement. There may be opportunities, but I'm going to say they're going to be very hard to come by, and we're going to have to experience a lot of patience, exercise a lot of patience in order to find the right situation. Into the 10-year now, volume slowed yesterday. We did add 11,000 in open interest on this move to the upside, but still unable to take out this swing high here. We're still putting in higher lows. We're working on putting in a higher low. I think that, as long as rates continue to slip to the downside, we may see this market continue its move to the upside. 13,520 is weekly kickoff high. 135.20, I should say, is weekly kickoff high. It's still a target for us. We're outside of last week's range, so there's one step towards coming into that area. But again, now we're inside extended trading hour range. We're not exhibiting a lot of momentum up here early in the session. We did have some overnight shorts that have now resolved themselves back to settlement, settlement is 135 even. We've got, no gaps, no runs, no hits, no errors, nobody left in these markets. So try and stay extremely patient. I think it's Tuesday. We've got ADP on, what is it? Thursday, I think. Let's double check. Yes, Thursday. No. Wednesday ADP employment, jobless claims on Thursday, employment situation on Friday, headline risks in the idea that the infrastructure bill could move forward at any moment. And here we are just kind of waiting for what that means, how we're going to take advantage of it. If there is headline risk, it's probably going to happen before we're able to sense it, before we're able to go find out what actually happened. Make sure you cover yourself with stops. But by the end of the week, I'm thinking there's going to be some better, more readable and groups of fish for us to catch closer to the end of the week. So Stay patient today. Doesn't mean there's not going to be opportunity. Just make sure you're, looking for the right opportunity, looking for opportunities where your risk is pretty small and the reward is greater than the risk. It's going to be a challenging trading day, if they aren't all that way. Looking forward to the coach's playbook today. See if we have any other questions. Hey, you said heckle. There you go. Reminds us today that, yeah, it's still summer. Markets look asleep. Sitting it out today is probably not a bad idea. Maybe keep one eye on them, see if anything changes, but try and stay very patient today. Ladies and gentlemen, traders, thanks as always for joining me. Let's take our deep breath. Always calms me. Hopefully you do that with me. Stay humble, grateful, and creative today. We'll see you for the market, for the coach's playbook today about 11:30. Looking forward to having a good one. And then, of course, Dan should be back with you for the market recap. If not, you might see my face again. Wouldn't that be a joy? Get out there and profit today. Trade well. Have a great trading day. We'll see you at 11:30 for the coach's playbook. Trade well.